Workers' compensation. It's probably the simplest form of business insurance there is. There's only a handful of endorsements that can be applied to this policy, and the policy is fairly standardized from one insurance company to the next and from state to state. But this simplicity should not fool you. There are several components to workers' comp that if you get them wrong, it can spell trouble. And what we often see are direct writers, payroll companies, and other competitors commoditizing this product, meaning all they focus on is the premium, and they screw up the actual costs the company will pay down the road. And I'll get into that a bit later. There are three major ways workers' compensation is rated and sold in the US. The most common is what is known as guaranteed cost. At the beginning of the policy year, the rates are set and fixed for the year, and the only variable in the policy is payroll. You start the policy with a payroll amount per classification, and at the end of the year, that's audited for what was actually spent on those payrolls, and a final premium adjustment is made. Guaranteed cost is how all small business workers' comp is written, and most medium-sized policies are written. The next rating methodology are high deductible plans. These are usually available to businesses that have a guaranteed cost premium where the premium is at least $250,000. In this rating structure, the insured, you, accept a high deductible in exchange for a substantial rating credit. That deductible can be $100,000, $250,000, or more per claim. And the policy has an aggregate or maximum deductible for the year, so you don't get wiped out. For businesses with great risk control, a history of low claims, both in frequency and severity, a large deductible plan may make sense. You'll pay out of pocket for most small claims and reap the benefit by paying around half or less than under a guaranteed cost plan in premiums. I break down large deductible plans further below. The final rating plan used in workers' compensation is retrospective rating, and these are really not deployed all that often. They are really reserved for very large firms where the premiums are in the millions of dollars. I haven't worked on a retro plan in years because the high deductible plan often will make more sense for a client. So for all small businesses and most medium-sized firms, guaranteed cost is the rating plan used. And for larger firms, high deductible plans are an option. Is that it? Is that all you need to know about workers' comp? No, of course not. Somewhere we need to put in the rates that are not just the rates. There's more to it than that. So what else is important to know about workers' comp? In my mind, the middle market type business that's spending $50,000 to $500,000 or more on workers' comp, the most important thing to focus on is safety and risk control so that you can lessen the number of workplace accidents and injuries you have. Why? Because there are two rating factors that impact the premiums, which are based on your claim history. The first is your workers' comp experience rating modifier, or experience mod. The mod is a debit credit system that rewards employers with better than average claim history over a 3-year period of time with a credit. Conversely, well, it punishes employers that have above average claim history in those 3-year time frames. A good modifier can credit your policy by up to 25% or more, and a bad debit modifier can add 100% or more to the premium you pay. I discuss what a mod is and how it works further down on this page. The second rating factor changes from state to state, but generally speaking, your claims experience will determine which insurance companies will want to compete on your account and how competitive each of them can be. The bottom line is that improving your claim performance not only helps prevent unnecessary injuries, pain, and suffering to your employees, but it also dramatically impacts the price you pay for workers' comp. The greater the premiums, the more emphasis you should be putting on safety and risk control. How do you do that? Well, for a lot of employers, they don't know where to start, and that's where we've been able to step in and create a tailored plan to each employer's need. That might include written safety plans and procedures, assisting with safety meetings, coordinating with outside consultants or insurance companies to provide support, and more. The point is, you don't need to go it alone. As experts in workers' compensation and worker safety, we can help develop, implement, and monitor a plan that fits your company's needs. To summarize, workers' compensation is a fairly simple policy, but the operative elements of it are not. The larger your company, the more that's at risk. You can't afford mistakes, claims, poor safety, or poor claims handling dictate the price you pay. You need to be in control so that you pay the lowest cost possible. And if you haven't looked at alternatives to guaranteed costs, Now may be the time to see if those rating plans would be a good fit. Want to find out more? Let's chat and see how we can help you and your team find the best workers' comp insurance for your company. Thanks.